Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Monday expert, entrepreneur. One of the chapters in my 15 conversation with real estate millionaires, I'll have you know, Mr. Greg Dickerson. How you doing, sir?
Doing great. Michael, how are you today?
I'm doing well. So I watch your YouTube channel all the time, usually about a day late or so. But you had a call on Bitcoin. I want to say it was 2 weeks ago, where you kind of indicated you thought the floor was around 36,000, which seems to have held very well. So I want to talk about what you saw in that. And then I have some other conversations about crypto because anyways, we'll start with your call of 36,000. What'd you see, all of that stuff, because it seems to have held up.
Yeah. So I called a local bottom at 36,000 based on a closing basis. So crypto is a 24/7 market, but it does reset every 24 hours so that you have your daily opens and closes in terms of price action. So those candles that are printed on a daily, on a daily basis, and then you have your weekly and your monthly, and we have a monthly close coming up today, which is really important in terms of the trend price action. But there's a thing called the death cross where the 50-day moving average drops over the 200-day moving average. It's known as a death cross in financial markets, not just crypto. And I just spotted a pattern where back in last year, what was it, March, April last year when the markets peaked, or 2021, there was a death cross that occurred before that June, July bottom. And then this year in November, that death cross, well, not November, but a couple of weeks ago or recently, it crossed the same exact amount of days from the peak of the prior two market peaks. Now, it didn't work going back into 2018, 2017, but just this cycle, we had a $64,000 peak in, what was it, April, May, somewhere around there. I don't know the exact day. I don't remember the exact day. And then again in November this year. So the death cross occurred the same amount of days after those peaks. So then I went back and I looked at, okay, well, how many days was it from the death cross to the bottom in June, July? And what was the percentage of a drop? And then I went over and extrapolated that out. And I said, well, if this pattern holds up, it says that we're going to bottom at the 36,000 range. And it's going to be around February 14th, where we'll have a bounce back into, a retracement to a, fib level that we're targeting. And that's, 618 to 702, which is a Fibonacci retracement, mathematical calculations that are used in financial markets that, all assets, all price markets it's a technical level that they retrace to after they've dropped. And then that's where we're going to have that, come to Jesus moment with Bitcoin and crypto. Are we going to continue on from there and back into a bull market, or are we going to roll back over into a longer, more sustained bear market and see even more downside and potentially break some of those lows that we set June, July, and test the 2017, 2018 peak of 20,000. So that's a thesis based on that death cross. And I said, if this holds up, that's where we're going to hit. Well, we wicked down to about 33,000, but we closed, Bitcoin closed at 36 on that day, or, within a few days after that. And we've held that 35 to 36,000 level. So it looks like the theory is holding up. And there's a few other people out there, analysts, that have been kind of finding confluence with this, early to mid-February timeframe, looking for a bounce. So here within the next 2 weeks, we're going to know whether or not this is going to hold up. And now, what would invalidate all this? If it just turned and just dropped, below that $33,000 wick low that the price wicked down to, which was basically just taking out stops, right? It was just a liquidity hunt when it wicked down to that 33,000 level. The closing is what I'm talking about. That's what's important. So if we start closing below 35,000, that will invalidate everything. And, we'll just have to reassess and see what's going on there. But right now, it looks like the thesis is holding up, and it'll be interesting to see if it does hold up and it does pivot and go back into that retracement. And that could see Bitcoin get back up into the $50,000 range for that retracement, depending on where the low is at the time, before it would roll over and go back into a more sustained bear market, more, testing some of those prior cycle lows. But if it breaks through those Fibonacci levels, which are technical levels based on algorithmic, trading formulas that the hedge funds, investment funds, and investors use out there, if it breaks through that, then we could just, be in for a new all-time high. And I did a video on that the other day, where that would take us. And that would be a 70 to 80,000 target
Wow.
before another little drop and then go back and see if you can go a little higher, kind of repeating that cycle.
Sure.
Now, the other thing that would invalidate this would be crisis around the world. If Russia invades and that becomes a serious issue, if another little bombshell is dropped in the market somehow, if coronavirus rears its ugly head again, those things are all, things that could invalidate stuff, black swan events, not so much black swan, but crisis type events that you just can't, foresee. But it's interesting, and it seems to be holding the pattern right now. So we'll see what happens.
Yeah, it's funny. That video of yours had a lot of video views. Again, I'm not a crypto guy. I got 1% as an insurance, as you know. And but I look through the comments. Crypto is a space I have not played in, but man, I spent a lot of time in those comments, and it's a different world. But what I took from it is a lot of people were giving you credit for that 36 call. So congratulations. I actually had a couple of questions about crypto. We're not going to talk Bitcoin, Ethereum, or any coins. I'm going to talk about crypto, the market.
Yeah, and on the comments, I want to clear one thing up right now. I get a lot of comments. You and me, both people are like, "Oh, you boomers." I am not a boomer.
I'm not a boomer.
I'm not a boomer. I missed the cutoff by 3 years. So, I'm sorry if if that hurts your feelings out there.
Yeah.
I am not a boomer.
I don't want to be.
I'm a Gen Xer, baby.
Me too, man. Gen X all the way. Hey, again, crypto market, altcoins, all of them. So I had a buddy of mine I've talked about many times that came to me in the first run up wearing this little fob around his neck, whatever that was, all excited. So I poked at crypto a little bit, ran away because it seemed all smoke and mirrors. I come back, I put some money in as a hedge, but I want to talk about what I learned researching it before I put in my insurance policy. One is there was a general belief that crypto was a hedge of inflation, right? If the dollar weakens or, the fiat currency, that crypto would, be a protection against that. Also, there was kind of in the same vein, it was a non-correlated asset. First and foremost, those two things, I think, while I read them a lot, while people were pushing them, at least as I stand here right now, to me, it's like those both are wrong. Inflation is raging, not working, and it's certainly not non-correlated. It is just as correlated as anything. So what do you think about those two things? Am I missing anything?
No, I mean, so Bitcoin has gone through a transition. It was created initially as a new form of currency, peer-to-peer transfer of value around the world, permissionless, no need for third parties, individual banking. That's what it was created for and the problem it was trying to solve. Okay. So what ended up happening as we've gone along is it's become, basically a speculative asset. And a lot of people ignored that aspect of it because there is, a group and a narrative out there of Bitcoin maximalism that, believes it's going to be the world's reserve currency and that, there's not going to be any fiat currency or money anymore. It's all going to be Bitcoin. Oh, wow. Bitcoin standard. So there is a belief and a philosophy out there that follows that. And that's where a lot of this comes from, is that narrative. And I think what everybody is seeing is, especially, it was much more retail driven prior to 2017, 2018, even in 2017, 2018. Now it's more institutional driven. The biggest money in the game now are institutional investors. There still is some retail participation, but the money that's in there with institutional funds kind of dwarfs that, as far as driving price action and things like that. So it's a very different space now. It's not retail driven, it's institutional driven. Now, if you want to say store of value, which is the argument of a hedge against inflation, it has, for people that invested prior to these two cycles, the problem is 70% of the people that are in the space now and that own got in the last year. So they got in at the tops, and that tends to be what happens with retail. Retail tends to buy the top and sell the bottom. So a lot of people that have recently gotten in the space have gotten in it at the top. So to them, it's not a hedge against inflation. It's not a store of value, and it's a bad investment right now. And, if it hits 100,000, if it hits 200,000, then that conversation is different. And that's the argument that people make is, oh, well, we're talking long-term. You can't look at Bitcoin by the day, by the week, by the month.
Zoom out.
You have to zoom out. You have to look 5-10 years, because the history is correct. It's gone up. It's always gone up. It draws down 80%, but it comes back. Draws down 70, comes back. So right now, this is the least dramatic drawdown that Bitcoin has seen in its history, given a correction that we've had. Now it'll draw 50 here and there, but generally in a bear market, it draws all the way back to 70, 80% before it rebounds and comes back. And it'll have some bounces along the way, but ultimately it will bottom. And we don't know if it will or if it won't right now. We're waiting to see how the cycles play out. So when you look at long-term, people that
Mhm.
got in, prior to the run-up, of 2021 after the March bottom, if anybody got in, even if you're in at 20,000 at the peak in 2018 and you wrote it down and wrote it back up, you're still in good shape.
Mhm.
You're only up a little bit, but you're still up, you've beat inflation over that
Sure.
time period. So the argument is correct, depending
Okay.
on when you got in. And, that's the unfortunate part is for people that got in at the top, we don't know. Nobody knows,
Yeah.
where it's going to go or how long it's going to last. And, whether or not, it becomes obsolete as a technology or a thesis down the road. I mean, we just don't know. We know technologies get replaced all the time.
Mhm.
Bitcoin is a technology. I mean,
Sure.
that's what it is. When you look at the price cycle of Bitcoin, you're looking at the adoption curve of a technology. That's what that is. So, there's no guarantees. I believe in it. I think there's enough network effect now. There's enough institutional involvement that once we get regulation, once we get clear guidance on what the space is going to look like moving forward, I think Bitcoin will stabilize. It'll continue to grow, and it will prove itself, ultimately as a digital gold. I think it is a better investment product than gold because of all the attributes of Bitcoin,
Sure.
because it's instantly transferable. You don't have to physically hold it, store it,
Mhm.
all those different things. And, divisible, you can, divide it up into Satoshis, all these different, things that make Bitcoin such a positive thing. I think it's a great technology. I think it's a great solution for that store of value problem that we have. And it's, limited supply and all that. But I don't think, in the near term, that means it's worth $1 million a coin either. I
Yeah.
think, you need a lot more capital in the space. It needs a lot more of a proven track record before it can reach, super, super high levels. And a lot of people don't agree with that. And nobody knows exactly where it's going to go up. Nobody knows exactly where it can go down. All we know is where it's been, what it's doing. And, that's what you have to look at.
Well, let me close out on the other point. So that was a great example of inflation. And I agree with you. Right? You zoom out and you don't look at where you got in. I think that's well said. What about the whole non-correlated asset? Because at least over the last couple of years, it has been very correlated. And it wasn't supposed to be, but maybe it will be going forward because it is a risk asset. Money chases it. Or has it just been, hey, there was too much money, inflation was here, people put it in different places? Or what do you think about non-correlated?
No, it's definitely correlated, and you can
Okay.
see that. I mean, it'll derail here and there. Like the other day, the NASDAQ was going, I think, down and Bitcoin was going up, just very short term,
Sure.
Period of time. And then you have the dollar. Whenever the dollar's up, Bitcoin's down. Whenever Bitcoin's down, the dollar's up, vice versa. So you're seeing that. So yeah, it's definitely correlated with, other financial markets. And it's because the biggest players in the space now are institutional investors,
Got it.
investment banks, investment funds, hedge funds, very small participation with, sovereign wealth funds, life companies, insurance companies, things like that. Endowments, they're dipping their toe in some, but we haven't seen, the amount of investable capital from that. That's $100 trillion around the world or more, that could potentially come into the space. So even if they contributed 10%, you're talking about a significant amount of capital that could flow into the space.
Yeah.
I mean, very small amounts of money have been put into the space by these larger investors because they don't trust it yet.
Right.
They're waiting for regulation. They're waiting for, regulatory guidance and clarity around the world so that they can be confident and comfortable investing in the asset. And they're looking for more, stability, with the gains that we've experienced come volatility with a newer technology. That's just the nature of the business, or the nature of the beast of an emerging technology. So that's kind of where we're at now and what's needed. But yeah, it's definitely correlated because of the recycling of capital, right? It's like the rotation of growth into cyclicals, into, tech and all that. Same kind of thing.
Very cool.
It's a tech stock. I mean, it's basically a tech stock.
Yeah. Well, again, folks, Greg has expertise that I do not have. He goes in areas that I do not. And one of them is obviously crypto. He made a wonderful call a couple of weeks ago. I suggest you check him out. And where do they go? GregDickerson.com. All my info is there. YouTube, podcast. Go check it out. Thanks, buddy.